What if I told you that economic crashes, the ones that wipe out savings, collapse currencies, and decide who rises and who falls, aren't random at all? What if the chaos you've been told is unpredictable? It's actually been repeating for centuries on a quiet, measurable, almost mechanical cycle. A cycle so powerful that once you recognize its pattern, you can see the next crisis long before anyone admits it's coming. Today, we're pulling back the curtain on a financial clock that never stops ticking. Even when governments pretend everything is under control, this is the secret cycle that makes economies crash. To understand this cycle, we need to go back not decades but centuries. From the Panic of 1792 to the 1873 Long Depression, to the Great Depression, to the 2008 meltdown, and the global debt spiral today. A strange rhythmic pattern keeps resurfacing. Economists ignored it. Politicians denied it. Bankers quietly profited from it, but a handful of historians, mathematicians, and financial theorists noticed something unsettling. Every major economic collapse followed the same sequence, triggered by the same hidden forces. And at the center of it, it's a cycle as old as money itself. But the twist has nothing to do with interest rates, GDP, or stock charts, and everything to do with debt, power, and the limits of trust. The cycle begins with a simple idea. Money can be created faster than real wealth. Ancient kingdoms discovered it first. Emperors stretched gold supplies by mixing coins with cheap metals. Paper notes replaced silver. Governments issued promises instead of assets. Each innovation increased prosperity, temporarily, but every shortcut planted the same seed. Debt grows. Faster than the economy can pay it back. Once that happens, the countdown begins. Next comes the expansion phase. Banks loosen lending credit flows like water, governments overspend, asset prices inflate. People feel richer than reality allows everyone believes the boom is permanent. But beneath the surface, another force grows. Leverage. Debt piles up. Risk concentrates. Confidence becomes fragile. And the cycle continues ticking. The crash phase always starts quietly. One bank fails. One currency weakens. One government bond auction goes badly. One big institution admits losses. Suddenly, the illusion breaks. Credit freezes. Markets spiral. Businesses collapse. Governments panic. In every era, the cause seems different. War, inflation, speculation, corruption. But underneath, it's always the same mechanism. Too much debt chasing, too little real value. The cycle reaches its breaking point. After the crash comes the reckoning. Currencies reset, banks merge or die, savings vanish. Governments rewrite rules, ordinary citizens pay the price, and every generation says the same words. We will fix this so it never happens again. But they never do, because they're not fighting a mistake, they're fighting a cycle. Here's the brutal truth. Every solution makes the next crisis worse.
Nice.
To stop a crash, governments print more money.
House.
To calm markets, central banks lower interest rates. To save failing institutions, regulators loosen rules. Each fix fuels the next bubble. Each rescue adds more debt to the system. Each shortcut compresses time before the next collapse. The cycle doesn't stop, it accelerates. This is why crashes in the 1800s occurred every 20 to 30 years, in the 1900s every 10 to 20 years, and now, in the 2000s, every 7 to 10 years. The clock is speeding up. Look around. Global debt has crossed $315 trillion over 60% of all dollars were created in the last few years. Countries are borrowing just to pay interest. Banks hold more derivatives than ever. Inflation is still rising in hidden layers of the economy, and the same old signs have returned. Excess money, excess confidence, excess debt, weak real growth. A fragile financial system tied together by trust. The pattern is identical. The clock is ticking again. Economic crashes aren't random. They follow a repeating, measurable cycle driven by debt and confidence. Every fix governments use to avoid a crisis only guarantees a bigger one later. The next reset, 1 TB an accident, TES, the next scheduled phase of a system built on borrowed time. And here's the warning. The cycle doesn't care if you're ready. It doesn't care if governments deny it. It doesn't care if people think this time is different. The clock always hits zero. The question is, who will be prepared when it does? If you found this eye-opening, hit like, subscribe, and share this video with someone who still believes economies collapse unexpectedly. Because once you see the cycle, you can't unsee it.